Both silver and gold prices appear to have been building further support this week. The silver spot price was up a couple cupronickel dimes, closing around $16.45 per ounce, while the gold spot price appears to be ending the week around 1,420 fiat Federal Reserve notes per troy ounce in derivative contract trading. The gold-silver ratio continues to fall, ending this week just over the 86 level. In the full context of this historic ratio, silver is still extremely cheap to gold at the moment, although it has been gaining a little value versus the yellow metal over the last few weeks. This week we have a returning guest, Louis Cammarosano of SmaulGld.com. He's coming on to discuss several key long-term silver derivative and bullion-related price charts. As well, we'll end this conversation covering an excellent book which Louis turned me on to this past spring, 2019. The subject of the book, of course, delves much to do with silver and its history in bringing China and Asia into a globalized trade that's centered through modern-day Mexico and Bolivia even. You want to stick around until the end for some highlights of the Silver Way. After a brief message from our show sponsor, I'll be back with our guest and a deep discussion on silver to see if you can catch the exact moment mid-podcast as Louis transforms into, for him, what I would describe as a raging silver bull. Stick around. SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. Founded in March 2012 with the goal of providing the lowest cost bullion available, SD Bullion has become one of the largest US-based precious metal dealers and is regularly recognized by Inc. magazine as one of America's fastest growing companies. We are committed to being your trusted source for low cost, highest quality investment grade bullion products. Visit SDBullion.com for more information. Welcome to this week's Metals and Markets Wrap. I'm your host, James Anderson of SD Bullion. With us this week is returning guest. He's the proprietor of SmaulGld.com website, Mr. Louis Cammarosano. Louis, thanks for coming on the podcast again.
Hey, James. Thanks for having me on again.
So, Louis, we had a little bit of discussion before the interview started, and we kind of, I sent you a whole bunch of charts that I was looking at yesterday, and I always enjoy going through the charts with you, to have a little bit of a discussion regarding points revolving around either the gold or silver market. Today, I figured we'd focus in on the silver market since silver's been acting up so late of late in terms of price and showing some strength. So I was hoping we could just run through a few different charts and possibly discuss them and have the viewers who are watching on YouTube enjoy perhaps seeing some of the things that we're going to show.
Let's do it.
All right, cool. So this first chart I sent you, slide 1A, is it shows the COMEX silver open interest value. And the chart that you're looking at right now, it shows silver on the COMEX from 1970 all the way to today, almost 2019. A couple things when you look at this chart, the top piece is the spot price for the COMEX silver. So you can see the Hunt Brothers explosion in 1980, and then the depression roughly in the 1980s, 1990s, and then the 2000 to 2011 run, and obviously the price drop from that point to today roughly. The middle shows open interest, the number of contracts that are actually traded, day to day, and then it also shows the open interest value, meaning the value per contract based on the price. And so a lot of times those spike when the price of silver is spiking. So right. The highest levels are obviously in 1980 and 2011. Just a couple things about this chart that you can see that are very obvious, especially in the center section that I find interesting. The number of contracts, the open interest, when the COMEX and the CME, in 1980 basically changed the rules on the Hunt Brothers, effectively pulling the rug out from their leveraged long position by saying, essentially you couldn't go long in silver, you could only literally you liquidate your position, etc. You basically see the entire silver pit just kind of walked away. I mean, the amount of people trading in that market just totally fell flat. Obviously, the price fell from that point onward, but also just the entire sentiment in that in that section of the COMEX completely fell apart. And one other point about comics. People obviously hate the comics. They think the comics is a rigged game. And if you go back to learn a bit about the founding of the comics, in 1974, WikiLeaks found these cables. They're U.S. Treasury cables. And it kind of talks about, the founding of the comics. In late 1974, there was a meeting in London with a lot of the big major people involved with gold back then. And it seems that the U.S. Treasury was trying to come up with a way to dissuade people from hoarding gold over fiat Federal Reserve notes because gold was becoming legalized in 1975. And the London gold traders were effectively saying, if you create a huge derivative market, we can create enough volatility that will dissuade people to hoard gold over fiat Federal Reserve notes. Now, I'm sure you've done your research in that too, Louis. I just wanted to let the listeners out there know that exists. You can simply search gold prices in 1974 on SD Bullion, and you could learn more about those sordid facts and historical documents.
And I would add that for most cases, the reason you have a futures market is for commodities where you need to handle seasonal adjustments. It's not to dissuade people from hoarding the physical.
Yeah, that's correct. I mean, commodity markets and futures markets, they go back to like the Code of Hammurabi. Like it goes back to like ancient Egypt, like back when people were raising wheat.
Grain, that's right.
Yeah, and so this is something that actually has a practical application for people in the real world that actually make it. The problem is that now we've allowed speculators and commercial banks to overrule in a lot of these markets the actual people that make the thing, right? So if you're a miner
or have an actual interest, exactly.
Yeah.
They have an interest in trading so they can make money on their spreads or whatever their trading objectives are.
Mm-hmm. Right. And so, I mean, the argument today is essentially that the silver market is totally dislocated from the reality of things in the physical world. And I would argue that that's the same case in a lot of commodity markets, not just in silver, but more so in silver probably than any other. But there's a lot of these cases in other commodity markets too. You just have so much speculation in currency and banks out there that are dictating or being able to move prices up or down dependent upon perhaps their agenda and their ability to do so.
Remember, James, we had the discussion when the LBMA had some people come in, some traders, been trading for 20, 30 years, and she showed them a gold bar, and this big trader of 30 years had never seen one before.
Yeah.
So it shows a disconnect that they have no real interest in the underlying physical at all.
Yeah,
they're trading a price.
Yeah, and that's the CEO of LBMA now. Her first name is Ruth, I believe, or some. It's slipping my mind. She in this Bloomberg interview that I had put somewhere, I believe, on SD Bullion, maybe in that article itself. Basically, she's talking to Bloomberg and saying, hey, we actually went to a mine in Colorado and it was so cute and all this stuff. And it's like, I mean, it's just like the way that they talk about people who actually produce real things in the real world is just so disdainfully gross. They act as if they're somehow more sophisticated and more intelligent than people who actually make the stuff. And it's just disgusting. Like the attitude that pervades through the way they speak. You can just tell how much higher and more worthy they think they are than other people. It's disgusting.
Oh, there's a rock here.
All right, so let's move on to the 1B slide on the COMEX.
Okay.
All right. So
I do want to mention, if those people are looking at the slide, you do see an increase in open interest in terms of just the number of contracts, and we know that for the most part, a lot of those contracts are short.
That's true, and generally, in terms of bull markets, what you want to see, especially with price run-ups in silver, is you want to see open interest explode. You want to see the speculator side of the open interest winning the battle, right?
We're seeing it in reverse.
Somewhat, yeah, somewhat. Of late, perhaps maybe we're seeing a little bit of a turnaround, but that has been the case for a long time, where the contracts have exploded and the short side has been winning. That was not the case though from 2009 to 2011.
Correct.
You could see some a run up in the amount of open interest in that time frame. It's a small area on the graph, but you can see it. And the longs, the people who are betting long on silver won in that time frame. Okay, so the next slide, we got 1B COMEX. It's COMEX silver. volume and value. So obviously the top section of this chart showing, again, the spot price for silver. We have daily trading volumes, which is just simply how many contracts are traded day to day. And then the bottom section is the daily trading volume value. So it's not only the daily trading volume, but it's also multiplying it by the price of silver at the time. And so it's pretty obvious that 2011 was the spike for that section. The middle section is interesting in the sense of lately. We had second highest all-time daily trading volume in COMEX silver, and it eclipsed 250,000 contracts traded in a day. And that's at these price levels. So something is...
People, if you're looking at this chart, you have to go to the very far right. It's hard to see. It looks like it's the edge of the chart, but it actually shows the line hitting over 250,000.
Yeah, you really have to squint. It's difficult on YouTube sometimes to really lock it in. I may even focus it for viewers so they can see it specifically, so they don't have to squint too hard. But yeah, we just eclipsed it, and it makes one think... what's going on? What are the underlying shifts that might be occurring here? Why did so many contracts get flipped? Why were so many contracts being traded in a day's time? I don't know. Obviously, I don't trade in COMEX silver futures. So for me, it's just simply something to think about and ponder over, moving forward, I suppose. Anything you think of looking at this, Louis?
Well, I would speculate that silver's been down for so long. And I don't necessarily pay attention to the gold-silver ratio as an indication of where silver might go, because I think silver has an entirely different supply-demand dynamic. But silver is very attractive at the moment, I would believe, for a very nice 10, 20, 30% pop. And that's very attractive to traders at these levels.
Yeah. And
so I think there's some positioning going around the fact that if you look at the chart above the daily trading volume, look at that price. You have a flat line for about 4 years, even though you had that little peak up to $20 in 2016. But it's essentially been a flat commodity in a world where all asset prices have been inflated. And at some point, people need to rotate out of assets. They don't have to be silver bugs. They don't even have to know anything about silver. They just look at the chart and they say, that's something that pops every now and then. Let's start dipping our toes in the water.
And interesting to note, too, you mentioned that end of 2015 into 2016 run up for silver, right? We went from roughly $14 silver up to 21 in terms of like a matter of 6 months. It was a small time frame. It was a huge run, and not only silver did well, but a lot of mining shares did well. I think some of them did extremely well. Like First Majestic did gangbusters on the stock market when that happened. But if you look at that daily trading volume, around that time frame, there's a daily trading volume that hit 200,000 with that price action. So obviously at that point there was a lot of movement in terms of people going long or short, and the longs obviously did pretty well for a short time frame. Hopefully the longs who did well didn't stay around too long, because those people are mostly medium and short term traders. They're not buying contracts typically to take delivery, to sit on that silver for decades, hoping and waiting out the time when silver does its crazy magic, typically every decade or two. The main point of this chart was really about the 250,000 contracts that were traded in the last few days. It's something that's interesting and to keep an eye on, potentially what is going on underneath the tectonic shifts in COMEX silver.
In any trading, they do say volume precedes a price move.
Yeah, that would make sense, I would think. Let's see here. So we're going to move on to the next slide. Transparent silver holdings. Transparent.
This is my favorite.
You like slide 2A, huh?
I most certainly do.
Okay, well,
and I'll tell you why. If you look at the chart, this is unlike the gold chart, which you don't have to juxtapose, because the way the gold chart for holdings of GLD works is as the price rises, the amount of gold in the GLD rises. When the price falls, you get outflows. If you look at the general trend of this chart for silver, irrespective of the price, and you don't have the overlaid price, you can just see that SLV and the rest of the silver ETFs and other funds have essentially gone straight up. And that to me shows that there are some long-term holders. that are interested in putting silver away at $14, $15 an ounce, which they've had the opportunity to do now for years. And that is a very interesting dynamic compared to, it doesn't match the price flows, it doesn't match the COMEX flows, it just seems to go up. Now, the downside to that is there's a lot of silver there that could be sold, but it's still very interesting that silver, because of the price, I think it's because it's inexpensive. If you look, the amount of silver held in these funds is over 1 billion ounces, and that's up from 850 billion ounces, over 1 trillion ounces. No.
Wait.
yeah. 850. I'm sorry, 850 billion ounces up to over 1 trillion ounces of silver. That's right.
No. Reverse that. 850 million ounces to over 1 billion ounces. Yeah,
there you go.
It gets tricky, right?
800 million ounces to 1 billion ounces, not 800 billion ounces to 1 trillion ounces. Yeah. Well, if that were the case, silver would be $1.50 an ounce.
Right. We'd still be back in the 1930s depression prices. All right. So just for context, in general scheme, like if you're looking at this,
I was going to say I like this chart.
Oh yeah, no, it's confusing. I mean, billions and trillions is one of the most interesting words that's being used so often and bandied about, but there's a big difference. All right. So getting back to the overall chart, right? So we're talking about there's just over 1 billion ounces in these transparent silver inventories. And this chart is done by Nick Loward over at Gold Charts R Us, who runs around and he aggregates all this data. Thank God for this guy, because I don't know where we'd be without that dude doing all these incredible charts. We would be in a lot of trouble in terms of having any type of understanding of what's going on here without his work. So anyone who doesn't know who goldchartsrus.com is, it's an old eclectic website with old coding. But if you go on it, you can bandy about and find incredible stuff. So this one is, for context, just remember in the silver market, annually, on an annualized basis, about 1 billion ounces of silver get used up, and maybe 20% of that comes from recycling, and about 80% of it comes from new mine supply on an annual basis. So for context, you're looking at basically a year's worth of silver in the world's supply factor here. So it's not scary in the sense that this is not like 20 decades of silver being held that's ready to be dumped on the market and it's going to ruin everything. It's not that. I think
it's about a year's supply of mining supply.
Right. And so,
which is about 800 million ounces.
Right. And context at the peak, in my research in the 2010s, I believe 2015 might have been the strongest year for silver investors buying supply. They peaked at 1/4 of that year's supply, roughly, going into bullion in some form or another. So that's in 2015. I mean, it could get even crazier at some point down the line. So it kind of puts in perspective how much this really is in the total scheme of things. But it's been climbing of late, and the biggest two sections that have been climbing really are the 2006 introduction of the ETF, the silver ETF SLV, which I believe charges shareholders 50 basis points annually for the pleasure of having a derivative that supposedly tracks silver, but yet gives you no upside and premium, and also gives you no actual silver that you own in your own name or title. That has been exploded. That exploded in 2006. There's a lot of speculation that the silver pile that Warren Buffett and Berkshire Hathaway sold off in 2006 was the starting silver that was used for the SLV. So there's a lot of speculation as to the reasons for that and whys, et cetera, and whether or not that was the silver that Buffett sold off, started the SLV. Either way, the puke green, key lime colored green that you see there, that is the SLV, and that's how much silver is being held in that ETF, at least allegedly, right? I mean, some people don't even believe that. And then you also have the COMEX, which is the blue bottom section. That's the fractional reserve silver that's held in the COMEX warehouses. And we're reaching levels again that are peaking around the peaks in 1990s in terms of how much silver's in the COMEX. And that's been running up effectively since JP Morgan really got involved in COMEX silver. And of course, they are now the largest private silver position in terms of like one entity having control, or, basically representing underlying people who have control of, I think, 153 million ounces. And as well, Brinks New York has been There's been a lot of, I'm not sure exactly, obviously we don't know who is sitting in the COMEX Brinks, New York, but there has been a huge amount of silver going into that COMEX warehouse as well.
Yeah, so overall, it's 300 million ounces, of which half of it is JP Morgan, 50 million is Brinks, and then you've got Coins and Things and HSBC. You've got other entities as well. But the bulk of that silver, as you can see, has risen, it's tripled since 2005 from 100 million ounces to 300 million ounces. And again, the bulk of that is the increase in the JP Morgan warehouse.
Okay, so we'll slide on to slide 2B.
Can we go to the coin sales?
Sure. You want to jump to coin sales? Sure thing.
Yeah, the reason I want to jump there is you mentioned 2015 was the big year recently for investment silver, and that's a combination of, I think there's about over 100 million sovereign mint ounces sold between the U.S. Mint, the Canadian Mint, the Mexican Mint, the Austrian Mint, the Perth Mint, and then, of course, India imported about 300 million ounces. So there was a lot of silver going into investment that particular year. But if you notice on this chart, the dollar value of the silver, it's not at its peak. You can see because the price went down.
Yes.
So what we saw from 2011 onwards was a real increase in consumer demand for investment silver. Now, I have a chart that shows from in 2005, that investment demand for physical silver only made up about 5% of overall silver demand. That's because we only used to sell prior to 2008, 2009, 7-8 million American silver eagles a year. That number jumped into the 30s, 40s, up to 47 million in 2015. And we saw similar increases from like 800,000 Canadian silver maple leafs all the way up to like 35, 40 million by 2015. But you could see that the dollar value that went into that was lower. And the reason I wanted to jump to this slide is you do see the same thing that in the transparent silver holdings. You have the number of ounces here, the 1 billion ounces, but you don't have the value of that silver that's in here. Whereas below, you have the value of the silver sold in coins, but not the
overall
actual
ounces.
number of ounces. Yeah, so it's important to note that in both of these charts that we've had an increase in SLV and COMEX silver, meaning I would call that paper silver, right? And we had simultaneously, up until 2016 in the middle of the year, an increase in physical sales of silver in the form of American silver eagles, Canadian silver maple leafs, and the like. But since the end of 2016, we have seen a drop-off in that physical silver sales at the U.S. Mint and other sovereign mints, but not a decrease in silver hoarding, supposedly or presumably, at the COMEX and at the COMEX vaults and at the SLV and other silver ETFs.
One other important point about this U.S. Mint coin sales chart is the fact that these are only newly, freshly struck coins that we are measuring on this chart, right? So in 2015, you had a huge amount of people come in because the silver spot price they thought was was really good value, and so they came in and bought heavy, and that produced record size amounts of silver eagles and other sovereign coins and other bullion products that were sold that year. But this chart doesn't take into account, in 2016, 2017, 2018, 2019, a lot of the secondary products that have been coming back into the market from people who, for instance, in 2016, you had a run up for silver from $14 to $21. In that run up, you had a lot of people who, believed that they had either made a mistake or were just happy to break even and sell back their products, etc. And so what you see right now in the bullion industry is a lot of times you'll see backdated gold coins, for instance, being sold at premiums that are incredible. For instance, I saw we had some gold Krugerrands being sold at SD Bullion for like $9 an ounce over spot. Gold Krugerrand for $9 an ounce over spot. That essentially means that someone came in large to sell gold Krugerrands into the bullion markets, and therefore the premium pass through as far as the pricing of the premium, it got a lot cheaper because those ounces were acquired a lot cheaper. They weren't bought directly from the South African mint. They were bought from some large investor who had a huge load of Krugerrands to unload. And so what you see right now in the industry is, there's weaker new line coin sales that are being sold because you have a lot of secondary product coming in that's being sold off at a lot lower of a premium. So it's throwing a little bit of a wrench into, I suppose, if you just looked at this chart and didn't think about the fact that, a lot of people who are dollar cost averaging don't really care if they're getting a 2019 Silver Eagle versus a 2015 Silver Eagle. They simply just want the Silver Eagle at the lowest price they could possibly get.
Right. It just means that the demand doesn't mean that the demand has fallen off a cliff 60%, but it does mean that the demand is being met from existing supplies, which means there's not as much of a need to bring on new silver supplies through mining.
Okay, so let's jump back to the slide 2B and just go through SLV tonnage for silver. And you had brought up a point earlier about how, and I'm not going to bother putting this chart in there because I think most people have seen it, where you see a chart of GLD, the amount of gold that's supposedly held GLD versus the price. And there's a strong correlation, meaning if the price of GLD, if it's going up, the actual tonnage that's in the ETF is going up too, and vice versa. Right. Whereas here we have a situation where SLV, and we can crowdsource this question. I don't even know it. I mean, I know enough about the SLV to know that flat out there's a small group of APs, authorized participants, who are the only ones who can take delivery of any of the silver that's in there. They can exchange their SLV shares for actual ounces in the trough of bullion that's held in it. But what I don't understand is, I do somewhat, but it's just gone flat essentially since, right? Since 2011, the peak, it just kind of hovered around, we're talking about, what is that? How much tonnage is in there? There's 10,000 tons of SLV. I think lately there's 11,000. There's been a huge spike of late. But what I suppose is for GLD, you have a lot of gold bullion getting pulled out of the GLD in order to meet a lot of the Eastern demand. I would assume a lot of those bars in the GLD coming out of London are being moved over to Switzerland, being reprocessed into kilo-sized bars and moving off to China, or and maybe other larger bars moving off to India to be used for gold jewelry, etc. But what I still don't understand is why this SLV inventory level is just so flatline. It just is, I guess the APs just don't need it that much. There's a little bit of a squiggly line there, but it doesn't really jive like GLD does as much.
No, I'm looking at currently the SLV key facts sheet, and it's 359 million ounces. It hasn't really, it actually, it's moved up, but as you say, it's relatively flat. But that shows that there is an interest in silver just to hoard or just to trade. But the difference, as you mentioned, gold, there's a demand for gold where people actually, I think that the investors want to hold it. Because if you're a wealthy individual, you can actually take delivery of a few $1 million worth of gold and self-store it in a Swiss vault. Most people do not want anything to do with self-storing $5-10 million worth of silver. It's just too much. So they put it in the SLV and they leave it there. That's my guess, that if you're a silver investor, you're less likely to need the physical, which is a bad thing, because that takes some of the physical demand away. So the physical demand is left at the very small retail level, people buying the biggest monster boxes of Silver Eagles, but not buying millions of dollars worth of silver. I think anyone who wants to buy or take a few $1 million position worth in silver is going to do so either through a combination like the Hunts brothers did in COMEX contracts, or in buying SLV or Sprott's physical silver fund. But I don't think a lot of rich people have their vaults full of silver because the storage costs have to be exorbitant.
Well, I would argue that it's not true. That the basis point pricing for, if you shop around and you know what you're doing and you find a safe place to store silver in an authorized warehouse, like for instance Loomis or Brinks, or
yes,
you can find pricing that's lower than SLV, and it stays in your title. So unless you're someone who's looking to trade it or straddle it or do something more complex,
that's the problem. To trade that amount of silver, then you have to first arrange to have it sent to Loomis or to
Sure.
Brinks,
Sure.
and then you have to transfer it again to whoever's going to sell it for you. So I would think that's an inconvenient factor, whereas a rich person can easily port a certain amount of gold, a large amount of dollar value gold, and just bring it into the dealer and get it sold.
Yeah, I mean, look, SLV and GLD, don't get me wrong. I think they're decent derivatives in terms of people who want to trade them in a short or medium term. I only pointed out in the terms of, if you're a multimillionaire and you're long silver and you have a feeling like Warren Buffett did in the late 1990s, or if you have a feeling like Nelson Bunker Hunt had in terms of silver, you'd probably be better off if you're taking a long, strong position of just having it fully outside the system.
Always. If you're buying anything for purposes of insurance, which gold and silver serve that purpose, then you don't want it in a trading vehicle, and you're not necessarily concerned about how liquid it can be on a moment's notice. You want to know, do you own it? I think that's an important thing to mention.
Yeah, and I think some of the most savvy silver and gold investors have always a strong position, like we just discussed, outside the system, and then they also straddle a little bit on bets, whether it's going up or down. Whether they think it's oversold or undersold. There's a lot of investors who do that too, and they use derivatives a lot of times because it's just easier to trade and it's less costly to do buy and sells, right? So let's move on to slide 2C, the monthly transparent silver holdings. It's an interesting chart that shows, that remember that chart of monthly transparent silver holdings that we were at, where it was over 1 billion ounces, most of it in SLV and COMEX. Well, this is essentially that same chart. The top half, you can see the blue line. It mimics exactly that chart, where in 2006 the SLV comes around, and just the amount of silver that's transparently held in warehouses is just jacked up ever since. The one thing that's interesting is the monthly change. The bottom section of this chart, monthly change is obviously blue. It's going into the inventories, and red is coming out of the inventories. So you see huge amount of inflows. For instance, in 1997, you see a huge amount of inflow and then a huge amount of outflow. That's around the time when Buffett was getting involved with Berkshire Hathaway, which is interesting. And I haven't gone full details exactly how that's happening and why that's happening, but what it looks like is that they took delivery off the COMEX, is my hunch. The next section obviously shows SLV taking huge amounts of inflows in 2006 onward to 2011, and then you see a huge drop and loss of silver coming out around the time of the price spike of $50.
Right. On
the far right, which is probably the most interesting part of this chart, at least in terms of today, is the fact that we've just had about 50 million, just over 50 million ounces, most of which flowed into the SLV. And the question, I guess, a lot of people are asking are what's going on and why so much. I mean, that's arguably, I can't tell on this chart, it's arguably equal with the amount of inflow that happened around the time that Buffett was involved with the silver market in 1997. So it essentially gives off the impression that some large entity is really betting hard on silver, it looks.
Well, my theory is, and has been, based on the gold-silver ratio. I mentioned that they have different supply-demand dynamics, but one of the things I like to point out about silver is that it does have we mentioned it was 5% in 2005. I never finished going through the numbers. And then in 2015, the amount of silver required to meet investment demand because of that increase in American Silver Eagles, Canadian Maple Leafs, and so on, reached 25%.
Yeah.
And also, today it's down around 12 or 14%. But the point I like to make about gold and silver is because gold has a much higher demand in terms of the percentage of investment. It's upwards to 40 some odd percent, and that's in the form of individual investment and central bank investment. But then also there's another 45% of overall gold demand that goes into jewelry, and arguably a lot of that is also investment. So gold is 80, 85%, maybe 90% investment, whereas silver is 70, 75% commodity, some jewelry, but only 10, 15% for investment. But when gold takes off, and this is my thesis has been that gold has to take off, break above that was at 1375, 1380 point. Once it did, my understanding would be that gold would then continue to rise. At the beginning of the year, I said if gold gets to that 1400, 1500 level, that would signify that there is a bull market in gold underway. Mm-hmm. And that's when you start to see investors look at silver as an investment, and the amount of investment demand starts to increase, which puts pressure on the supply for silver. And maybe you're starting to see that now in these big increases in silver holdings. You're seeing it in increases in the amount of open interest on the COMEX. You're not yet seeing it in the retail demand, and generally retail is probably the last people to get involved. Mm-hmm. But I think if gold continues, let's say it breaks 1450 and it continues to head higher, that's when people start to take a look at silver and they start thinking gold's a little too expensive for me. Maybe I want to catch the silver ride because I missed the gold ride from 1200 to 1500.
Yeah,
that could be happening right now.
I totally agree. I think when you're talking about the average person, the marginal buyer, right? That's I think what we're talking about.
Yes.
And we're also talking about the marginal speculator on COMEX who's looking for a place where there's action, right? And it's a question of, is he a long bias trader or is he a short bias trader? You know, a lot of people, I remember I had a buddy who was, speculating in silver derivatives in 2010, 2011, and we were talking from two sides, right? I was talking on the long side, he was talking on the short side, and he was just foaming at the mouth with how great a short this is going to be potentially for silver, right? And he was right. He's proven right. It was a great short in April 2011. It produced, I would imagine, for the people who are on the short side, incredible profits. But, there's always two sides, I suppose, when you're talking about the long and short side. The question is, when is that marginal buyer coming in, not only in the physical side, but also on the derivative side, and really going to start pushing around the people who are betting downward on silver's prices?
Right. So let's take our gold and silver bug hats off and just look at it objectively and say, look, the gold price is rising. The gold price has been rising. Do I want to short silver? Why would that even enter into my mind?
Yeah.
So you would think,
yeah.
What else is in precious? Now you're starting to think precious metals. And then you say, okay, let's look at platinum. Let's look at palladium. Well, palladium's already had a big run up.
Right.
You might start looking at platinum on the same level if you're just marginally interested. You're just a trader. You're looking to speculate. But I cannot see how some would come to the conclusion, if gold is rising, that I better run out and start shorting silver.
Yeah, no, it's you brought up platinum there, and I've talked about it a bunch, where platinum is literally at levels as cheap to gold as it's been in over 100 years. And,
yes.
And you have palladium doing this crazy run up, and platinum is essentially the sister metal in terms of its commodity use in a lot of car exhaust fumes, etc. It's just that Dieselgate Volkswagen situation that kind of started off platinum's extreme bear market of late. But I mean, when I look at all the precious metals I major for, platinum and silver, I think silver especially is undervalued, but platinum is extremely cheap too. So it's for a long-term bullion buyer, having some platinum exposure at these prices is probably good long-term value. Okay, so sliding on, I think we're going to skip the retail buyer U.S. Mint sales chart, since we kind of covered that earlier, and we're just going to move on to the one of my favorite charts, the East versus West, New York overnight versus intraday silver spot price.
You don't mean this is your favorite chart. You mean you like to discuss this chart.
I loved I don't like it in terms of my beliefs behind why this is happening. I mean,
right.
But what it shows to me is that there is an opportunity if you time it correctly in silver, and sometimes if you don't time it correctly, you're going to have to wait for a very, very long time. But if you do time it correctly, man, you can make some good money in a short amount of time, or some good gains in terms of value versus other asset classes. So I dragged this chart out. I think we talked. It was a few times we talked before. We had done a podcast talking about the LBMA, and we had talked about it previously in this interview about the CEO of the LBMA, and we had done a little bit of a discussion about the LBMA gold price chart, and then also this New York silver chart. And for anyone who doesn't understand what this chart's showing, the blue line is essentially the silver price outside of the New York trading hours, essentially the COMEX trading hours. And then it shows a red line, which is essentially the silver spot price in the full fiat currency era. This chart covers 1970 to today. And then it shows a black line, which is the COMEX, the beginning time of the COMEX to the end of the New York COMEX trading. And, there's a lot to discuss in this chart. We did a lot of discussion last time we talked about this chart. For anybody who wants to hear that interview, just look up LBMA gold transparency and our names, and you'll find that video. But I think the reason I wanted to just throw this in there was a couple fold. It really... when I'm looking at it, I want to look at it in terms of, the 2009 to the 2011 run up for silver. Now, if you're looking at this chart, the 2009 low for silver in spot, the red line, it rolled just below $10 an ounce. We actually hit the high eights for silver spot. It was the lowest it ever got. But if you look above, that blue line, you see that the Eastern silver price was just doing the exact opposite of what was going on in terms of the spot price. And if you look down at the black line, you see, again, a waterfall decline, and that's in the COMEX trading hours. Now, a lot of people out there would say, that was JP Morgan. Just listen to Bart Chilton's interview with Chris Marcus. JP Morgan inherited Bear Stearns' silver position, this huge short silver position that effectively helped possibly Bear Stearns find its bankrupt end. JP Morgan took that over and came into the silver market and just shorted it from 21 down to 9 and made a huge killing. And if that's the case, that's fine. I'm not sure if that, on my hunches, it probably is true, but I don't have the documents to prove it. But the one point about this is, look at the Eastern line, the blue line at the top, just going in the opposite direction. Now, when that happens, effectively, in my opinion, just looking at this chart, when that happens, at some point it's got to come back. And what you see is a snapback rally from $9 up to $50, where the Eastern price kept climbing, and finally the red spot price touched it at $50. Now that, in my opinion, whenever that blue and red line touch, that's a time to be thinking about dishoarding a little bit of your silver and moving into other asset classes. I think that anytime those lines touch, it's probably a time to move into something else. But the one thing I wanted to point out on this chart is that look at the $21 high in 2016 and then the drop off from there. And look at the Eastern price. Again, we see a dislocation where one is climbing, the other is falling. But of late, you can kind of see a little squiggly line.
Starting to move up.
Exactly. And so I just wanted to throw this chart in there just so people can kind of keep it in relation to perhaps what's undertaking here with silver. And whenever we talk, I'll drag this chart out again because it's just one of my favorites. There's just so much to see in it if you really pay attention.
Well, I'm gonna add that I have for the last 3 or 4 years been listening to a lot of silver commentary and people saying this is it, game over, game changer, this is gonna happen. And I actually think what we've been looking at today, I think, does somewhat foreshadow, not in a hyperbolic way, a upward price move in silver. Mm-hmm. These are things that are actually real. They're not invented. We're looking at increased open interest. When you have a volume coming in, that usually precedes a price move. It could be downward, but I think it would probably be upward. You've got a bull market that looks like it's establishing itself in gold. You've got an increase in transparent silver holdings. And you've got this little chart here showing that the red line is moving up. So I actually think that if the gold price continues to move higher, silver will move higher, absent some type of commodity shock, which I don't anticipate, meaning that somehow there's less need for silver, a dramatic drop-off in silver for electronics or solar panels. And we haven't seen a big increase in either of those in the past 10 years due to thrifting, but we haven't seen a big drop-off in them either. So if the commodity price demand stays stable and everything remains constant in the mining supply, which it could drop off a bit too, and we have this increase in investment demand, you might see a rise in the price of silver. Because remember, gold has risen the last 8 months and silver hasn't. Yeah.
I mean, there's a lot of stored energy there that potentially could happen. And, just like that low in 2015 to 16, from 14 to 21, we're talking about a small time frame where the price essentially went up, 50% roughly?
But keep in mind that gold is much higher now than it was back at its peak in 2016, and silver is still not anywhere near that.
Right. So I guess I mean, to close, it's encouraging to hear SmaulGld get bullish a little bit, and then secondly,
I still like mugs more, but I'm liking silver today.
Okay, good. And then the other thing is, call me, when the spot price clears above $21 fiat Federal Reserve notes, because that is technically the most important thing. I really think once we start getting above 21, then that effective silver bull market is back, game changer, all that stuff can start coming out the woodwork again and have a little bit more credibility.
Yeah, this is it, the big one.
All right, Louis. Well, I wanted to end the discussion today by giving you a couple things. I wanted to give you credit for, I enjoyed for a long time your YouTube channel. You've done a lot of great work on YouTube. But I noticed there's been a little bit of a change in your YouTube methodology. But before you tell me why you've changed a little bit of your channel situation, I just wanted to commend you on a video you did on this book called The Silver Way. It's a small little 84-page pamphlet written by Peter Gordon and Juan Jose Morales, and it's a really interesting book. And you were someone who actually got the book, bought it, read it, and then did like a long podcast about it. And I was impressed, the fact that you did that for your followers and listeners, and I found it very interesting, and I told you I would love to read that book and then have a discussion with you a little bit about it. And so that's essentially what I'd like to get underway. But before we do that, I'd like for you to explain what's going on with your channel on YouTube and how are you doing your videos these days?
Okay, so my channel is basically gold, silver, cryptocurrencies, and economics, and I don't have the largest audience, and I really don't have many controversial topics, at least from the perspective of what Google would be interested in. I don't talk about social issues and so on. Mm-hmm. But I've seen a lot of channels that do crossover, SGT Report, many channels, don't even just have to focus on Sean's channel, who have been hit for no reason, demonetized, had their channel taken down, a whole bunch of arbitrary actions that we've seen across YouTube. And I said to myself, I don't want to build an audience on a platform that potentially could just whack you at a minute's notice. I mean, this censorship is a form of violence. It's a digital whacking. And it's not like when you're in a bar and you get pulled out by the bouncer, at least you know who's dragging you out. I mean, here you're getting sniped at, and I don't want to participate in that. Now, I do realize that Google is a public utility in some respects because it is subsidized by the government. They've got an exemption. So in a sense, whatever lawsuits they haven't had to face because of their 230 exemption, I'm subsidizing. So what I've decided to do is not just totally abandon the platform. I used to do nightly live streams, is to post on my website, SmaulGld.com, post on BitChute.com, but then also post for a 12-hour period on YouTube. I mean, I'm entitled to use the platform, I'd imagine. And a lot of people, my audience, most of them moved over to BitChute and subscribed there. A lot of them haven't. And a lot of them think that it's inconvenient to do both. Well, I think it's inconvenient to have a system where YouTube can whack you at any time. And the idea is, when you decide that convenience is more important than the possibility of getting no content because you're refusing to support another platform, I think that's a short-sighted, misguided point of view. It's almost like the Ben Franklin, If you give up, what's the expression?
Oh, yeah. Those who are looking for safety always lose their liberty, essentially.
Something like that. So if you want to prioritize convenience, I mean, how hard is it to open a new browser and go to BitChute? I mean, it's not that inconvenient. So I figured if the people really like the SmaulGld content, they'll go see it over there. And I still get about 300 or 400 views on BitChute. That's what I was getting on YouTube. So I'm not on YouTube on a daily basis. I'm there now for the last 3 days. I do post, but then I pull it down. And what I think, if a lot of content providers did that, if the reason that people are not moving to other platforms is the convenience, it's up to the content creators to create the inconvenience and post on other platforms. They're not going to lose their audience totally. And then people will start to realize it's inconvenient to be on YouTube because sometimes the stuff isn't here when I want to see it.
Mm-hmm. Yeah, I mean, I was just looking on Twitter yesterday. A guy I've interviewed before, Chris Irons, he has I would say a podcast that is rated R in his language. But
he cusses and swears, right?
Yeah. I had him on here, and I tried to beep out every swear word. It was a lot of work. But he got sounds like he got YouTube, silenced essentially recently. So I think he had on Dave, I forget the guy's name, but he's a professor at a college or a university, and he had him on, and they just had a brief discussion about. I believe the discussion was about conspiracies, the pros and cons of actually delving further beyond what the official narrative is. And I'm sure it wasn't, I didn't listen to it, so I don't know how controversial the content was. But it's like this strange situation, like you say, where you don't understand the basis upon why people are getting, their videos taken down or why they can't make any money on the website, et cetera. It just looks like Google and YouTube have essentially taken sides. Obviously with the government who essentially allows them to exist and flourish. And they're going to do whatever they want. So they're going to lean on. Yeah.
I self-censored, I self-deplatformed, and I use it for my own benefit. I go over there. If people are too lazy, there's a lot of people that you could see in the comments. Well, you can't because I've taken the videos down. Sure. Hey, welcome back. Missed you. And I'm like, I haven't gone anywhere. I told you where to find me. And they're like, hope you keep posting here. And I'm like, I hope you maybe just find SmaulGld.com or go over to BitChute. And these are people that have bought mugs. These are people that like SmaulGld. These are not people that are just casual viewers. We have a long-term relationship, but they're like, oh, what do I have to do?
Yeah.
How do I type in BitChute? Oh, no. I'm on YouTube now.
Yeah, there's like this.
And a lot of these people complain about YouTube too.
Yeah, that it's like this critical threshold of how many accounts do I need? How many passwords do I have to keep track of? It's like.
I get it, and that's why I say it's up to the content providers to make it more inconvenient.
Yeah.
Because if they're going to complain about YouTube, you need to make it difficult for YouTube.
Yeah.
Because they're lording over the fact that they have this big audience.
Yeah.
But they only have that audience because the content providers are there.
Right, and they only have that audience because in the beginning of YouTube, it was a much easier platform to use, and it was. I mean, people will argue that YouTube was a lot more fun when it was free. So now it seems like YouTube is getting politicized, and it's also full of a lot of I don't know. I mean, I saw a recent poll. A lot of young kids want to be YouTube stars. It's like. I don't know. If I was a parent, I'm not sure I would allow my children to watch YouTube. That's like one of those things where it's very hard to police. The algorithm will feed them things that perhaps they shouldn't be watching. It may need to be a situation where there's two YouTubes, one for children and then maybe one for adults with brains that are 25 years and fully formed.
That could make sense.
Yeah.
What was that song? Radio killed the video star?
Yeah, right.
We should go back to radio.
So let's get back to the final close of this, the Silver Way. I had the pleasure of sitting. No, it's totally fine. I had the pleasure of sitting down and reading this book the other night. It's only 84 pages. I think you can get it on Amazon. I'll backlink it in the show notes. It's brand new. It's like $4. Used, it's a couple bucks. So if anyone has interest in learning about silver's monetary history, a little bit more of perhaps the history that you were never taught in your history classes in Gringo America, this is a pretty good book. I think you'll find it insightful. I wondered, I guess to give just a little bit of a background on it, Louis, it really is a history about an explorer by the name of I'm going to screw his name up, Urdaneta. Andres de Urdaneta, who in, I believe, early 1500s, he figured out a way to take ships from Mexico all the way over to Manila, Philippines, and then figured out a way to come back without dying. Okay, and so this is like huge, right? Because essentially that opens up the markets in China and Japan and all these incredible Asian countries that had incredible wealth and sophistication at the time, and we're creating things that the New World, in quote unquote New World, wasn't doing as well. And so it's a book about Spanish explorers who came over to Mexico, and obviously were looking for gold and silver. Everybody knows that story. Who literally found this incredible, which is another interesting part of the story, this incredible city in Bolivia, Potosi, which has a Sierra de Potosi. I'm sure you've done a podcast on that alone. It's an incredible volcano-looking mountain. It's just perfectly a V-shaped mountain that disgorged incredible amounts of silver. And that,
if you can't pronounce Potosi, they call it the Silver Mountain.
Yeah, exactly. So the Silver Mountain of Bolivia just coughed up huge swaths of silver, which ended up getting minted either there or eventually at the Mexican mint. And that essentially set off the situation where the Spanish, Real de Ocho became the reserve currency, essentially, of the world. It became the currency of trade for a huge swath of time. And this book is all about incredible trading that happened from 1565 all the way to about 1815. Basically, Mexico City benefited a huge amount from this. One of the things I found interesting was Acapulco was like baller royale. I mean, Acapulco was like this huge trading place where all these ballers would show up once a year, and there would just be this massive trade fest because the ships would come in from Asia after they had disgorged a lot of silver in Asia to pick up all these products. They'd come into Acapulco, and the trading, it was like the best trading times for hundreds of years were Acapulco. That was the place to go if you wanted to buy products and then go sell them in your sophisticated big cities.
There's a point not made in the book, but you mentioned that they were going to the New World to get the silver and gold. But if you think about actually why they headed west, Columbus and the rest of them, to get to the New World, they were trying to get to Asia. Now, they didn't expect there to be this small part around Mexico where you can cross and then get to the Pacific. But they were trying to get to the east to get spices. And what ended up happening was when they ended up in the New World and they found all this silver and gold, they realized that the Chinese wanted silver for the spices. So it's actually fortuitous that they got there, picked up the silver, and then I call it the silk to silver trade. They then brought it over to China, who had a silver shortage, and they got their silver, their silk, and all their other Chinese products, and then brought them back. It's a story everybody talks about, Europe to across the Atlantic. That was the big event. Actually, the big event was figuring out how to get those riches, not just back to Spain, because that just created inflation in Spain when they brought a lot of silver back, but actually how to take that silver and put it into essentially the first global monetary system, mint up coins and get them over to Asia and then bring the products back.
Yeah.
And that's, I guess, from an American perspective, that all happened down in Latin America. And then you know what else had happened? It happened in the 15 and 1600s, well before people were even thinking about the United States.
Yeah. And I just personally speaking, I recently relocated to Panama, and there's UNESCO World Heritage Sites that were destroyed in the early 1500s, which the original colonialists, the Spanish colonialists, held. And then you have the old city in Casco Viejo in Panama City, and that became the second place where the Spanish explorers were living. And it's just old colonial Spanish city. I mean, there's a few of them, a handful of around, but Panama has one. And literally, one of the explorers named Bolivar, his last name was Bolivar, he was the first guy that just walked across Panama, essentially, and then got on boats when he got to the Pacific and started doing exploring elsewhere on the Pacific side. And that cross that Bolivar made across Panama is historic. And even around here, like, we still use the U.S. dollar, but Panamanians don't call it dólares, right? They don't call it U.S. dollars. They call it bolivares because, yeah, they don't care if it's a different currency. They're still proud of their historic, their history. And
now our listeners know more about Panama than just the Van Halen song. Which is good. By the way, the video killed the radio star. I made up two screwed up today. As I said, the radio star.
It's all good. And in culture, like the younger kids who are listening to us, that's the first video that ever played on MTV back when MTV was pretty awesome.
That's why I know that song. It was by the Buggles, I believe.
Yeah, it's a one-hit wonder song. It's a pretty great song. If you looked it up on YouTube, Video Killed the Radio Star. It's a cool video, and that was back when MTV was actually a cool channel.
When they actually played music videos. What a concept.
Yeah, right. So I guess, in the context of this, this book, I can't strongly suggest enough for us to go through all the sort of details about it. It's 84 pages. There's a lot in there. It's pretty deep and delving, but it's history that you were never taught in your gringo Anglo history, classes. And I don't care. Unless you went down Spanish heritage classes, perhaps in history, you may not understand what occurred here in this section of the world through Mexico. Mexico City, at different points in time was just, they had a lot of wealth running through Mexico City and through Acapulco. And I found it really interesting, and I want to thank you, Louis, for encouraging me to check out the book, because it was a great read, and it only took a couple hours just to sit down and read through it.
All right. And also for our listeners, the Mexican Mint, which is still in operation today, that also was created in the 1500s. It was one of the major sources of those pieces of eight
Yeah, yeah. I
that were
just
used in international commerce. I mean,
yeah.
you're talking 16, 17, you're talking 300 years before anything is happening in the United States
Yep. Yeah. Yeah. And that whole
in terms of European colonization.
right, and that whole concept of what we call dollars, fiat Federal Reserve notes, what the Chinese yuan, that literally comes from a lot of this history. The actual term yuan and the yen for the Japanese yen comes from this history as well. So a lot of our monetary history springs up from this historic past. So anyone
And
who's
until 1857, those pieces of eight were legal tender. Those silver
yeah.
coins were legal tender in the United States.
Yeah, it wasn't until the U.S. Mint kind of took control of the situation in the mid 1800s did we start getting formalized monetary coins and stuff in our system. But yeah, the pieces of eight were huge in the founding of the beginning of the United States. That was like the main circulating silver at that time, and
that was the original global reserve currency.
yeah, yeah. I mean, some might argue, I guess, when you look at that, you've seen the chart before, right? The reserve currencies of the world, gold has always been one, but we've had the United States before it was the pound. Before it was, I believe the French. They had a lot of gold coins from the time that Napoleon went around empiring. Before that, it was the Spanish Real de Ocho, and then prior to that, you got the Netherlands, the Dutch. They were running around in Asia doing a lot of trading, and then before that, you got Portuguese. They were moving around and moving a lot of currencies. So it's interesting when you talk in terms of history, the amount of depth, that the stuff that you have to learn. It's a rabbit hole that's so big, and I try to be humble in the sense that I don't know enough, and there's a lot more to learn. So it's a great book, and I do appreciate you turning me on to it. Hey, Louis, I do really appreciate you coming on. I wanted to give listeners out there who appreciate your insights into gold and silver a method or a way to come find your work. So how can they find your work, and where can they see you?
We'll make it simple and convenient. Just go to SmaulGld.com. Everything is there. And from there, you can find BitSheet, you can find mugs, you can find charts, SmaulGld.com.
Oh, just real quick to finish up, how's the mug to silver ratio looking these days?
Well, people are recognizing that mugs are real wealth and mugs can never go to zero. So the mug business is flourishing.
Okay. I'm glad to hear that you're doing well and that mugs are flying off the shelf. Louis, thanks again so much for coming to our channel, and we appreciate it, and we look forward to speaking to you again soon.
Thank you, James.